Good morning, Jags. This is Fahad. Today is Tuesday, September 1st. Let's get started. Okay, so today I wanted to focus on the education tech sector because I believe that there are three different opportunities that are coming up to us. And this is a group that we have liked a lot. And but some of these stocks have recently, after announcing their earnings report, have taken a break, and they have either pulled back to important support levels or they've started to simply consolidate after a strong run. But I think that all of these three stocks that I'm going to talk about real quick, they're setting up for new leg higher, and I think it's a matter of a spark, and I think that spark will come sometime pretty soon because the fall semester just started everywhere. And as a result, I think we're going to see more upside ahead. So the three stocks, and all of these three we have covered recently. The first one is LRN, which is K12 Incorporated. I've had my eyes on this major important support around $35 per share. You can see this is a major VOP support level as well. Stock had a massive high volume run, went all the way to 52, and now it's down quite a bit from 52 all the way down to 37. But recently, if you look closely, recently I've started to see very high volume accumulation patterns develop in this name as it comes to the support. I think it's going to hold the support. You're going to possibly see a few days of consolidation formation before it starts to take next leg higher. There's a lot of ground to cover if this starts to take a next leg higher, if it returns all the way to $45 to $50 per share. So that's the first one, K12 Incorporated, symbol LRN. The second one, which many consider to be the best of breed, is CHGG, symbol CHGG. If you notice carefully, CHGG is starting to build basically a bullish falling wedge. I'll draw that in stock charts to show you what it looks like. But look closely, this is a bullish falling wedge that is likely to get resolved with a breakout rather pretty soon. So here is the downtrend resistance, and here is the um, here is the wedge. You know, bullish falling wedge is basically when something is gradually trending down, and to a naked eye, it may look like the stock continues to make lower lows and lower highs. However, the downside momentum is basically subsiding, following this wedge. And usually when the wedge breakout happens, in this particular case, you want to keep an eye out for above yesterday's high, which is $76 per share. If CHGG takes out $76 per share, I think we're going to see a power candle and a breakout that could quickly carry the stock all the way back to $80 to $85 per share. So keep an eye out on CHGG, symbol CHGG. This has pulled back about 12-13% from 52-week high. But then more immediately, the one that is setting up right now for a new leg higher is TWOU, which is TWOU Incorporated. This has a beautiful basing formation. Now we have a MACD bull cross. You can see right over here, we have RSI that is starting to lift higher. All right, and the stock has corrected itself, and take a look at exactly where it found support last time, which is exactly what we look for. You can see that on that pullback recently when the earnings came out, this was the previous breakout level on high volume. The stock corrected. This is also the VOP level, which is about $36 to $37 per share, and started to bounce off. And from here is taking next leg higher. They should carry it all the way to at least fill the gap, which is at 47. Stock currently at $41 per share. So I like this name for entry, and I think we're going to see this thing continue to gradually go higher highs and higher lows. Now, with all of that technical view behind me, keep in mind that back on March, Jay presented a fantastic bull case on this name on March 29th, precisely about the time when we were starting to see the market bottom, and after the March crash, and we were starting to see a trend emerge that the shutdown will continue to result in higher and higher usage of these online education tech platforms. This company has a huge business with a lot of trusted partners and many universities across the country, some international, some domestic. But you can see all the big ones that basically power this technology, from Ivy League schools to state schools and all of that. But the part that want to catch more attention is that, considering that Zoom video last night, you reported an absolutely blowout quarter, second consecutive times, double the beat, double the estimates, and then raise the guidance materially once again, and that stock is powering higher by more than 30%. In this discussion in March, Jay mentioned that the company said it's an early discussion to offer a skinny bundle for its LMS platform, essentially LMS with Zoom video embedded, to its university partners. Now, this is a key line that was discussed there. Now, why is this important? Because two things have happened since then that are worthy of attention to take this thought that we presented in March to a next level. The first one is that we saw evidence of this when the company reported last quarter. Where the company started to see tremendous amount of traction in their very LMS program using embedded Zoom video options available. So for example, for its graduate programs, the company reported that the full course equivalent, or called FCE, reaccelerated, and the pipeline suggests that further reacceleration for the second half of 2020 versus prior. Street was modeling a decelerating trend. When the company was asked specifically why that is happening, they mentioned that new enrollment demand is broad-based on online learning experiences in the spring and increasing current total addressable market size by more than 50%. And they said that we note the revenue reacceleration is occurring at a time when TWOU has slowed program launches, and additional fiscal year 2021 and 2022 launches should only accelerate growth while having minimal impact on profitability goals. To give you more specific numbers, the company reported its segment revenues, which was a standout, with organic revenue growth up 37% year over year in the second quarter, versus 20% growth year over year in the first quarter. So a significant acceleration in the program from Q1 to Q2. And I believe with all of these universities adopting education tech, we're going to see more of that in Q3. Short courses demand has improved materially as well, and the trend now seems to be more persisting rather than just one-off quarters. And as a result, after that earnings came out, which was right over here, the forward earnings estimates for the company for the revenues moved higher on the street from $851 million to $878 million, and gross profit and EBITDA profits estimates almost went up by 50% on the street after that earnings came out. Now you may be asking the question, well, then why the stock pulled back? Because notice over here is when the stock had a power candle breakout to new 52-week high, and it was marching higher. But it pulled back sharply because company announced 6 million secondary share offering. And I've always said that anytime a secondary comes out, you want to give it another week or two before you start to see a pullback and a basing formation, and that gives a really good entry. We have that entry now. The stock is pulled back recently. And the last thing I will mention on this one is that there is another news that came out on this stock on August 17, which was after the secondary offering, while the stock was building a base over here. And the company announced a new partnership with the university called Arcadia. And with Arcadia, they're going to be launching what they called a, I quote, semester for code program. Semester for Code program is basically going to be a 2-credit bearing program for undergraduate students at Arcadia, and along with its 300 partner universities, it's going to increase the total addressable market size to 2,400 grad students, as well as more than 3,000 international students that the company boasts with over 300 partnerships annually internationally. And so we do not know whether this thing is going to have a material impact on the company's financials, but this was announced 2 weeks ago. Naturally, it's just an incrementally positive news around the company. So I like it technically and I like it fundamentally. I've seen some pickup in option activity, but I'm not going to dive into that because this thing doesn't really trade a lot of options. But I think this thing is going to gradually return to $50 per share. All right, that's it from me. Jay.
Morning, everyone. Today I am looking at a stock called Catalent. Ticker is CTLT. I plan to actually issue a behind the numbers write-up later today. Based on that, the company did report earnings yesterday. Stock was up about 5.5%. This is a contract development and manufacturing organization company, or a CDMO, catering to the pharmaceutical and biotech industry. It offers drug delivery technologies as well as drug development and manufacturing solutions. The company operates through 4 segments: soft gel technologies, biologics, oral drug delivery, and clinical supply services. Now, the standout in the earnings report was their biologics segment. Net revenue was up 102%. Now, this was partially driven by an acquisition of Bristol Myers Biologics sterile and oral solid dose product manufacturing and packaging facility in Italy. Now, without that acquisition, net revenue was up 66%. And a lot of that, and as I kind of mentioned it today in first read in the section notable callouts, a lot of tailwinds due to COVID-19. And that's something I'll kind of hone in on when I do the write-up. But B of A was out today raising their price target to 112. And one of the things that they highlighted was that Catalent's full year guidance does not assume any COVID-19 vaccine approvals. But they do have agreements and in partnerships with AstraZeneca, I believe with Moderna as well. So I think this is the area that I'm going to focus in on when I do the write-up.
Is this going to be on homepage coming
yeah,
up?
it'll be on homepage.
Okay, good stuff. I'll be looking forward to that. I was actually just this morning, first read goes out at exactly 7:45 to 8 o'clock this morning, and 5 minutes after that, I was reading this very note from AstraZeneca, because AstraZeneca has been so much in the news, COVID has been so much in the news, and there's a lot of important tidbits of information over here, and a very powerful and strong high volume breakout yesterday. And so it's a very easy entry from a technical standpoint to somebody wants to play continuation and trend, which is you can put a hard stop below yesterday's low. And yesterday's low was about $87 per share. So that creates a very easy entry to continue to play the momentum to the upside. Looking and you look at these organic revenue growth of 66% or 87% EBITDA growth, this is just a complete standout. So looking forward to what else you would have on that article. Good stuff. Chronicle.
Morning. This is not really a trade idea, but it's more of a refresh of the bull case of a former top pick that we haven't talked about in a long time, Apellis Pharma, symbol APLS. The stock spiked yesterday on pretty decent volume, driven by phase 2 results from Novartis over the weekend, because the anticipation of the results for LMP023 had been putting pressure on Apellis shares. And even though Apellis aren't going to be releasing any major trial results until next year, I've been seeing a lot of notes on this company lately, with the general takeaways being the broad potential of APL2. First off, JP Morgan reiterated an overweight rating going into the Novartis announcement, and even though they're not expecting readouts and NDA submissions until next year, they are still expecting the company to outline the path forward for the Derby, Oaks, and Prince trials before that. And meanwhile, BMO was out with a note on Apellis yesterday, reiterating outperform. They're saying they believe the LMP023 data is a de-risking event for Apellis, as it alleviates at least some uncertainty. And then last night, Stifel was out saying they would be buyers of Apellis at current levels because they recently carried out channel checks with a hermatologist survey, and responses suggest that we're going to see strong demand for the company's inhibitor in both first and second line treatment of PNH. So basically, they're saying consensus forecasts are too conservative. And lastly, Baird was out with a note yesterday reiterating outperform with a $70 price target. They're saying the Novartis results over the weekend were unimpressive compared to Apellis's APL2, which, if we remember, APL2's phase 3 trial from June showed primary endpoint success, which was what led to the growing anticipation for an NDA submission. So Baird in their note is flat out saying that Novartis's LMP023 does not compare to APL2 because they don't see how Novartis is going to solve their problem of 2 failures for every 10 patients, which makes the safety profile a significant concern. And so this in turn makes it very difficult to convince patients to switch off from Apellis's APL2. And the reason why Baird has a $70 price target is because they're in the same camp as JP Morgan where they both think that APL2 has multi-billion-dollar potential. Like the opportunity for anemia alone is going to be $700 million, and that's not including PNH and geographic atrophy, which is going to be the big one next year. So catalysts for remainder of the year would be possible outlining of the direction of Darby Oaks and Prince trials, but the big catalysts are coming next year, including the phase 3 readouts for geographic atrophy and approval for PNH. So just trying to get a sense of why the stock was bid up yesterday, even though there's no immediate trade to speak of. I thought this refresh of the bull case could be like sort of a reminder for everyone to continue keeping tabs on the company.
Yeah, good update over there. Novartis caused quite a bit of jump in several key stocks of interest, including APLS, as well as there was Alexin Pharma too, which we highlighted with crazy amount of call buying that took place on Friday, two to 3 days in a row actually last week, and then it saw a massive spike yesterday on Novartis news. Coming back to APLS, first of all, purely from a technical standpoint, very strong candle yesterday on very heavy volume, and so power candle. If this thing still has to prove itself that this thing can push above 33, purely technically speaking, there's a large wedge formation. If it clears through all of this VOP, then could be on its way with this air pocket all the way up to $40 per share. And as a reminder to everybody that during the first quarter of 2020, APLS was made a top pick proposed by Avo. And so if you look at the table of contents right over here, you can go to page 21. You can download this file for free. You know, it's the quarter has been closed, first quarter 2020, right from homepage on the right-hand side. All of our quarterly outlook are available right on homepage. And then you'll see in the first quarter 2020 a APLS discussion on page 21 in this. And so that was a beautiful trade because literally 2 days after that quarter was mentioned, the stock had a clinical update and we had a massive breakout in stock going from 31 to 42, rising by more than 30% 2 to 3 days after the quarter started. So, but it has been in a steady decline since then. Technically, it may finally be coming to an end point because of the wedge is now starting to tighten after 7-8 months of doing absolutely nothing. Good update on this. We'll keep an eye on this and let's see if it sees any kind of pickup in call option activity. Avo.
Interesting fact about APLS is that they run their tests or their studies with Soliris, and I'm not sure if they use Ultomiris too, which is the newer version of Soliris, and also they do trial without using the Soliris, and their own formula without Soliris actually performs better than with the Soliris. So it's interesting that these two companies that have similar pipeline are doing so good in the past couple of days.
Okay. I think there was one client, at least in the chat room yesterday, who was pretty happy about this rally yesterday, and I wasn't aware, but some of the clients are so sharp because they spot when trends are back to important support levels and they know we have previously been very, very bullish, constructive with discussions around certain names. So when they spot these stocks come to important support, either they just ask me whether the entry is right here and let's go with it, or they just go ahead and themselves. So there was one person that might have been Nabil, who actually ended up buying a ton of a stock on Wednesday, Thursday last week, and then had a nice profitable position going yesterday. All right.
Looking at iRhythm Technologies, there was a bullish note that came out by Canaccord last week. This was shortly after the company did a 1 million share offering on the 19th, which didn't dent the stock by any means. Talks about positive. Oh, before I do that, there was a small call buying yesterday in October chain, which I don't know what they're targeting at, because we're looking more November for any kind of catalyst. So the notice talks about their products, and referencing to second quarter, which was surprisingly just about 3% lower. The sales were down 3% in second quarter, and their home enrollment option, which is supporting volumes. Now, before COVID happened, they had about 5% home enrollment, which means that they send you the package and then you use the ZO patch to monitor your heart. But at this time, or at least at the height of COVID, it was 50% of the patches were sent by mail. And what they've done is they've increased their capacity to be able to accommodate 100% if the need be. So they've done improvements in that. What the November-ish timeline we're looking for a catalyst is the mSTOPS 3-year data. Oh, sorry, December, not November, which which is expected to be read out at the AHA. It could be in November. Jesus Christ. Anyway, the outcomes would be key, because it would also set what the pairs might want to do. And there's other stuff that they mention, but mainly it's that, and the sales have not declined. In June, the rates were back to about 90% of pre-COVID levels, and progression had progressed into July. So this is doing rather well, as you can see.
Yeah.
I wish I would have presented a little better opportunity to enter, or at least we could have spotted it earlier, but we're recovering a lot of stocks.
Yeah, well, that's generally the problem with some of these names, where, I mean, this is yet another one that has been our favorite in the past in the medtech space, and we've written about this on homepage and discussed this multiple times. But wish there was just a bit more opportunity on. You know what I find interesting? This thing popped so big on August 19 from 170 to 210. On the day it announced 1 million secondary share offering, which I thought was really interesting, because you don't see stocks pop 20%
Exactly,
in a day.
yeah.
On the day they announced secondary. I mean, I guess there must have been a massive demand behind this, where they just the institutional support behind this, and it has not pulled back since then at all. It has been rather very, very resilient. Wouldn't give back any of those gains. And I'm looking at the last earnings report as well, which was right over here in the stock pop at that time too. The company posted a pretty strong quarter, beating the consensus estimates despite COVID. But the most important thing is that in that quarter, they talked about how quickly, within 5 months, basically 5 to 6 months, they were already able to reach back to pre-COVID levels, essentially. That update that's coming out in December could be significant, but I feel that as the stock has been re-rated quite a bit going into that event in December.
It's actually November. I was thinking of another event. So it's November, mid-November for the AHA event.
Yeah, we'll see exactly how the stock responds and if it pulls back at all before that for a potential entry. But impressive, really impressive accumulation patterns into the stock, and just continues to get re-rated higher. Maybe it's an M&A target. We'll find out over time.
And the most impressive part that I find is the actual volume levels, which as of June, 90%. That's pretty good. And July was accelerating still. So I guess that's part of the reason that demand was high.
Yeah,
for
sounds
the
good.
secondary.
All right, guys. Thank you very much for joining. Good stuff. That's it from us. We'll see you in the chat room shortly.